Hello everybody. Good afternoon. So we are gonna conduct this final session of this 6-day webinar. We are going to be discussing the overall mock debrief. We are going to be doing this mock debrief. A lot of the students are asking question that we need an answer to the mock examination question. So what I have done for the mock examination is we have not actually gone on to preparing a separate mock. We have simply used this December 2016 exam paper as a mock. So if you would have just simply seen the emails, you would have actually been able to ascertain that it's a December 2016 exam paper that's actually being used as a mock. So first of all, what I would actually want you to do is that if you guys could just have a brief overview of how many of you actually did try to go through the email that the ACCA people sent you last night. Mama Dubes, the slide has already been emailed to you. The slide has already been emailed to you. Okay, so if I could get a brief feedback, a quick feedback from you people, how many of you actually tried to attempt this paper? You didn't get the email, Usman? Not attended. We have not received either slides. Taj Muhammad Khan, I don't know what's wrong. Why have you not received? Because they've been sending it every day. They've been sending it every day. Anyone else? Okay, what I would actually want you to do is that, okay, if you have not received the email, then again, that's fine. All that you need to do is that you just need to download the December 2016 exam paper. Can you please have a quick, can you please download this December 2016 exam papers? Okay. So I think everybody of you have downloaded the paper now. Those who had not received would have downloaded by now. So now, Tahagil, you would receive you have received the Word document, the paper again. We would try and send it across. I would just ask the guy to actually put it across to you today only. Now, December 2016 exam paper. So if we go through this December 2016 exam paper, so what you would actually find out is we have already gone through question number 1 of this paper. We already gone through question number 1 of this paper, and we have already gone through question 1 and question 3 of the paper. So now what we need to do is that we now need to move ahead when we now need to attempt the other parts of this question, which is question 2, question 4 and question number 5. So these are the various parts that we need to attempt. So what I would actually request you people to actually come on to this paper and try to attempt question number 2 now. And the requirement of question number 2 is, in respect of each of the 3 matters described above, you need to comment on the sufficiency and appropriateness of the audit evidence obtained. So what you need to do is that you need to talk about the sufficiency and appropriateness of the audit evidence which is being obtained, number 1, and recommend further audit procedures to be performed. Number 3, explain the matters which should be included in the report in accordance with either 265, communicating deficiencies in internal control to those charged with governance and management. If you could have a quick review of this question, so then we could move forward and we could discuss. So I just give you 5 minutes. Just give a quick review and we'll start. Okay, now let's start discussing about this specific question. So it specifically says that you are the manager responsible for the audit of Thurman Company, a manufacturing company which supplies stainless steel components to a wide range of industries. It says the company's financial year ended on 31st July 2016 and you are reviewing the audit work which has been completed on a number of material balances and transactions. The assets held for sale and capital expenditure and payroll expenses. So these are the three matters that need to be considered. It says the summary of the work which has been performed is given below, and in each case the description of the audit work indicates the full extent of the audit procedures carried out by the audit team. Now this is the full extent of the audit procedure. That means if you want to evaluate, if you want to judge whether the team has performed the proper procedures or not, so what you need to do is that you need to think that this is it. Now what we need to do is that we need to, for each of the three matters described, we need to comment on sufficiency and appropriateness of the audit evidence. We need to recommend further audit procedure, and we need to explain the matters which need to be discussed with management under ISA 265. Now see, so first of all it says assets held for sale. IFRS 5 non-current asset held for sale and discontinued operation is the relevant standard. It says due to the planned disposal of one of the Thurman company's factory sites, the property and associated assets have been classified as held for sale in the financial statements. A manual journal has been posted by the finance director to reclassify the assets as current assets and to adjust the value of the assets for impairment and reversal of depreciation charge from the date at which the assets met the criteria to be classified as held for sale. The finance director asked the audit senior to check the journal before it was posted on the basis of there being no one with the relevant knowledge to do this at Thurman Company. It says the planned disposal was discussed with management. A brief note has been put into the audit working papers stating that in management's opinion, the accounting treatment to classify the factory as held for sale is correct. So management believes that the accounting treatment to classify them as held for sale is correct. Manual journal has been arithmetically checked by a different member of audit team and the amounts agreed back to the non-current asset register. Now you see there are three aspects to this question. And what are those three aspects? Number one of them is sufficiency and appropriateness of the audit evidence and the further audit procedure. For every single thing that we have studied, you need to understand that the risk is the driving factor. For every single item that we have studied, you need to understand that risk is the driving factor. So till the time you don't know the risk, you can't actually go ahead with it. So if I talk about this actually IFRS 5 non-current asset held for sale and discontinued operation, over here the most important aspect of this question is basically the classification as held for sale. Classification as held for sale. We need to understand, okay, does it meet the criteria? Does it meet the criteria for classification as held for sale? So number one thing is the classification as held for sale, in which it is important that does it meet the criteria for classification as held for sale? Now see, if I talk about it, so what happens is they might have actually gone on for the classification the specific criteria under IFRS 5 requires that if an asset is to be classified as held for sale, then the management, there has to be the management's, the asset should be immediately available for sale in its present condition. And the second one of them is the sale should be highly probable. The second one of them is the sale should be highly probable. And one is the sale highly probable. The sale is highly probable when management is committed to sell the asset, active program to locate a buyer is initiated, so when is the sale highly probable? The sale is highly probable when the management is committed to sale, there is an active program to locate a buyer. At the same time, asset is marketed at a reasonable price, and furthermore the last thing is that the sale expected completion within 1 year. Sale expected completion within 1 year. Now, so as an auditor, you should have actually gone ahead for doing the procedures which could satisfy the relevant assertions. So the classification was one of the assertions that should have been satisfied. There were no audit procedures. There were no audit procedures to confirm if it is correctly classified. Number 2, the sufficiency and the appropriateness of the audit evidence. Furthermore, what are you doing? The planned disposal was discussed with management. A brief note has been put into the audit working papers stating that management's opinion, the accounting treatment to classify the factory as held for sale is correct. So what happens is, as an auditor, all that you have done is you have simply asked the management if they believe that if it should be classified as held for sale or not. What you have not done is that the auditor has not performed any test except for inquiring management. Furthermore, for recognition as held for sale, asset needs to be measured at the lower of carrying amount or fair value less cost to serve. So there was nothing with respect to fair value. There was nothing with respect to fair value. There was nothing with respect to the fair value. So if I discuss it, what am I going to do? I'm going to conclude it this way, that the audit procedures that have been performed are not sufficient, are not appropriate because you have not performed the procedures to every specific area of the risk that is prevalent in this specific exam scenario. Now, if I move further, I would discuss further that this is one thing. Now, secondly, what are going to be the further audit procedures? So you do know that the audit procedures are always performed to actually check if the risk prevails. So what we need to do is that we need to perform the audit procedure like inspection of board minutes. We need to perform the other procedure like inspecting correspondings with potential buyers, comparison of price demanded with market price, etc., etc. So that's one of those things. The second thing is that these are the further audit procedures, so you would have to perform the audit procedures pertaining to that, the inspection of fair value and etc. Now, what exactly is going to be the communication of deficiency? So if I talk about the communication of deficiency of internal control in this given scenario, then what actually happens is you would figure out in this scenario that the finance director passed a manual entry. He's saying that no one else understands what needs to be done in the given scenario. No one else understands that what needs to be done in the given scenario. So now if I discuss this, what I'm going to do is that I'm going to say that there are lack of controls with respect to recording of transactions. The junior member should have passed the entry rather than the senior member passing it himself. So we need to actually discuss with management and those charged with governance, and we need to communicate them that one-off transactions, which are also termed as non-recurring transactions, should not be passed without appropriate approvals. So this is the thing. Now let's move forward and let's just discuss further about the capital expenditure. So if I talk about the capital expenditure, let's discuss. It says when auditing the company's capital expenditure, the audit team selected a material transaction to test and found that internal controls over the capital expenditure were not operating effectively. Authorization had not been obtained for an order placed for several vehicles and appropriate segregation of duties over initiating and processing the transaction was not maintained. So audit team selected a material transaction to test and found that the audit team noted details of internal control deficiencies and updated the system notes on permanent audit file. Audit work completed on this order was to agree the purchase of the vehicles to purchase invoices and to cash book and the bank statement. The rest of the audit work on the capital expenditure was completed in accordance with the audit program. Now you see, what happens is very important for an audit firm is that whenever you are going for performing the audit, you need to understand that what are the risks involved. Over here, it's not just, if you come across that the test of controls, you tested the controls, you figured out that the controls were not affected, then the next step is substantive testing. What you have done over here is you have not performed any procedure. All that simply you have done is we have updated the permanent audit file to record the internal control deficiencies, and at the same time the only thing that we have done is to agree the purchase of vehicles to purchase invoices and to cash book and the bank statement. The rest of the audit work on capital expenditure completed in accordance with the audit program. Now, the part B, capital expenditure. The audit program shall not be the final verdict as to what should be audited / tested. Now, important thing is circumstances are different to what was originally expected. So if the circumstances were different to what was originally expected, therefore audit program should not have been fully followed. Instead, the entity should have, the auditor should have gathered evidence to satisfy the relevant assertions involved in the recording of capital expenditure. So the appropriateness is not there. The procedures should have been, the further audit procedures should have actually focused upon number A, existence, purchase orders, so we identified these control deficiencies. The existence needs to be checked, the purchase orders need to be checked, and the goods received note needs to be seen. Value of these cars the value of the cars should be externally confirmed. So this is what we have actually identified with respect to further audit procedure and the internal controls. Let's talk about the internal controls deficiency. So you need to discuss that. No authorization. You need to discuss that no segregation of duties. No authorization, which means unauthorized expenditures resulting in cost overruns. The reason behind that is the guy actually is doing the purchases on his own. He has not sought permission from anybody. So there is actually a risk that what they might do is that there might actually be some collusion, and they might actually be having some cuts in between. Okay, now next is basically the payroll expenses. So the next one of them is actually the payroll expenses. It says payroll function is outsourced to Jackson Company, a service organization which processes all of Thurman's salary expenses. The payroll expenses recognized in the financials have been traced back to year-end reports issued by Jackson. The audit team has had no direct contact with Jackson Co. As the year-end reports were sent to Thurman Company's finance director, who then passed them to the audit team. Thurman employs a few casual workers who are paid in cash at the end of each month and are not entered into the payroll system. The audit team has agreed the cash payment made back to petty cash records and the amounts involved are considered immaterial. Now, use of service organizations. ISA 402, and there is this ISA 3402. So what happens is, whenever a service organization is being used, as an auditor, we need level 1, we need various reports. We need to assess the control environment prevalent So as an auditor, we need to assess the control environment which is prevalent at the service organizations. Now, if we need to evaluate the control environment prevalent at the service organization, then the important point is that there are two different types of report. There is type 1 report and there is this type 2 report. The type 1 report is basically very detailed report, and type 2 report is, let's say, less detailed. So what happens is, as an auditor, you should have sought type 1 report or type 2 report for the controls at service organization. So it says the payroll function is outsourced to Jackson Company, a service organization which processes all of Thurman Company's salary expenses. So it processes all of the salary expenses. That means we have outsourced it. The payroll are recognized in financial statement have been tracked to year-end report issued by Jackson. The audit team has had no direct contact with Jackson, as the year-end reports were sent to Thurman Companies, who then passed them on to the audit team. Why is the auditor not allowed to correspond with the service organization directly? So what you need to report to the management is that the control deficiencies that I've identified here are: number one, payments in cash, misclassification of recording of cash into petty cash, so that's what you need to discuss with the management. Now, why is payments in cash an issue? Because misappropriation of cash is a possibility. Yes, it's either 402, type 1 and type 2 report. So basically, if you've got a payroll, the auditor should have actually performed the procedures onto the outsourced organization. They didn't go through the outsourced organization. All they did was they just asked the management what has been happening with your payroll. Management says that a third party processes it and we just adopt it. So as an auditor, that's not appropriate. That's not sufficient. You should go ahead. You should obtain report pertaining to the third party. That should be a type 1 or a type 2 report. So you can have an idea about the controls prevalent in that third party organization. So once you have an idea about the controls prevalent at that third party organization, then can you actually go with the reliance on the work that has been performed by the third party. So the additional audit procedure should have been to gather this evidence, which is the type of controls there, and accordingly you need to explain to the management that the controls that are prevalent in your organization, where the cash payment is made to the people for the salaries and wages, that the part-timers, there's no record for them. You should have a record of every single employee that is working with your organization, because even if that record is not available, that is also a problem. So these are the various things that you're going to communicate with the management. Yes, service organization, or at times what happens is the third party is actually engaged and third party is being requested to prepare this report. Okay, now next is question number 3, rope company. We already did rope company yesterday. Now what you need to do is that you need to actually go about with question number 4, which is the Thornhill company for the audit of Northwest company. Let's try and attempt this question and then we'll discuss. Okay. Now the next question is basically this question number 4. So if I talk about this question number 4, it says you are an audit manager at Thornhill Company, responsible for the audit of Northwest Company, a subsidiary of Valerian Company. So you're responsible for the audit of Northwest Company, a subsidiary of Valerian Company. A different audit firm is responsible for the audit of Valerian and the Valerian Group financial statement. So we are auditing Northwest Company, a subsidiary of Valerian Company, and the different audit firm is responsible for the audit of Valerian and the Valerian Group financial statement. That means the parent company has got a different auditor and we are a different auditor. The requirement is discuss how professional skepticism should be applied to the statements made by the management and the auditors of Valerian Company regarding the outstanding legal case. So when we talk about this professional skepticism would actually mean there is a questioning attitude. You are questioning the statements, you're questioning the statements that are being made by them. So that's what the professional skepticism would mean. So it says the audit of financials of Northwest Company ended nearing completion, but the following issues require your attention before the auditor's report is signed and your communication is made to the group auditor in response to their request. The draft financial statement recognizes a loss before tax of 50,000. So there is a loss of 50,000. So there is a loss. Now, Northwest has been making losses for several years and it generates insufficient cash to meet its significant debt obligations. Company relies on support from Valerian Company in order to continue trading. The management of Valerian has confirmed verbally that it will continue to support Northwest Company, but has not provided a formal letter of support despite a number of requests. Now see, number one thing. Number one thing is that apparently this Northwest Company has a going concern issue. Now why does it have a going concern issue? The reason behind that is the company has been making losses for several years. And since obviously if the company is making losses, there is insufficient cash to meet its operations, insufficient cash to meet its debt obligations. So the result is that the company is being supported by the parent entity, and the parent entity continues to support them and has committed that they would continue to support this company but are unwilling to provide a letter of support. Now, that all gives rise to a going concern issue. Why does it give rise to a going concern issue? The reason behind that is the company is incurring losses, there is insufficient cash, the debt is not being repaid, so obviously there is a going concern issue. And the going concern issue could only be avoided if there is a letter of support from the Valerian Company, which is the parent entity. Now furthermore, you are aware that Valerian Company is the subject of a major lawsuit following an industrial accident which resulted in significant pollution of local agricultural land and most seriously loss of life. You attempted to discuss the matter with the directors of Valerian Company, but they refused, saying that it had already been investigated by the group auditor. The group auditor informed you that the case is ongoing and they have obtained satisfactory representation from both management and legal advisors, stating they were confident of successfully defending the claim. When you asked for copies of representation, the group auditor refused, saying that it was a matter relevant to parent company and that it was not relevant to audit of Northwest Company. So now, you see the overall scenario is that the entity is having going concern issues, and the going concern issues could actually be could become bigger issues if the parent company goes into liquidation. So the parent company is subject to a major lawsuit. So if the parent company is subject to major lawsuit, that means the parent company is going to defend that lawsuit, and in case if they are unable to defend that lawsuit, that would result in a substantial amount of cash to be paid by the parent company for settling that lawsuit. What would that mean? That would actually mean that the parent company won't be able to support this Northwest Company anymore, and resultingly the Northwest Company might not be a going concern. So basically what is happening over here? What is happening over here is if you analyze the whole of the scenario actually indicates that the Northwest company may not be a going concern and there is a risk of material misstatement. The parent company is not willing to give a formal letter of support. The group auditor is not responsive. The group auditor is not supportive. The management is not letting you have access to the information that you want. So this is all giving rise to a question mark that the comments made by the management are not correct. Now, shortly after making your inquiries, you received a phone call from group engagement partner who said that Board of Valerian is concerned that you might modify the auditor's report of Northwest Company. He also said that as the only person with full oversight of audit matters relating to Valerian Group, he did not think it would be necessary to modify the auditor's report and that he would oppose any attempt to do so. He suggests that if the debt in the financial statements was the reason for seeking parental support, that he would transfer it to the group and that the letter of support would no longer be necessary. So, see, apparently the group, the discussion with the management and the discussion with the management and discussion with the auditor, what is it all indicating? This is all indicating that there is something fishy going on. So as an auditor, you need to get alert with whatever that is going on, because the group auditor is contacting you. He is saying you that I have the full oversight over the whole group and that nothing is going to happen. And if you are concerned about this loan amount, then I could actually transfer this loan. What they are trying to do is that they are saying that if you are concerned, we can pass a journal voucher or a journal entry which would transfer the entire loan balance in the books of Northwest to the books of Valerian Company. So apparently, this is an unusual behavior. We have just asked for something and everybody is acting like, what has happened. So we just asked for the information. We have not asked for any clarification. We have just asked for the information. And on asking those information, everybody is getting concerned. Everybody is contacting us. Everybody is trying to be in touch with them. Means that goes to show that there is something seriously wrong with the Northwest Company's ability to continue as a going concern. Now, next part. Comment on ethical and professional issues raised, considering any implications for the completion of the audit in respect of evidence obtained in relation to support offered by Valerian, the request not to modify the auditor's report. Now here in this scenario, if we go ahead, you would say that there are a lot of ethical and the professional issues. We do have an idea about the overall grid that we have been using for the ethical issues question, but let's go through the question again. Now, Northwest has been making loss for several years and it generates insufficient cash to meet its significant debt obligation. Company relies on support from Valerian. The management of Valerian Company has confirmed verbally that it will continue to support. So, but has not provided a formal letter of support despite a number of requests. That means apparently the integrity of the management is in doubt. Now, why is the integrity of the management in doubt? The reason behind that is apparently what seems is that the management is not willing to give you a letter of support. Why? Because there is something that the management wants to hide from you. The group auditor. The group auditor is apparently not sincere also. His integrity is also in doubt. Why? Because the reason behind that is the group auditor is stating that the case is ongoing and we have obtained satisfactory representation from management and legal advisors, and then he is actually contacting you again. Means there is a problem with the management, there is a problem with the legal advisor, and there is a problem with the group auditor also. All three people have the problem. When you asked for copies of representation, group auditor refused, saying it was a matter relevant to the company and not relevant. Shortly after making your inquiries, you received a phone call from the group engagement partner who said that board was concerned you might modify the report of Northwest Company. He also said that the only person in full oversight of audit matters relating to Valerian Group, he did not think it would be necessary to modify the report, so and so, and that he would oppose to any attempt to do so. This is actually an intimidation threat. Now, why is this an intimidation threat? Because you are saying that we are opposing that there should not be any modification. That means you are trying to influence our decision. You are trying to influence the opinion that we are going to form. And for seeking parental report, the point that the auditor actually made, it goes to show there is some self-interest involved. The group auditor, there is some self-interest involved. Either they are over-dependent on this group, either they are over-dependent on this client. There's something involved with this specific group audit team that is resulting in them calling you again and again and contacting you again and again and trying to hide information from you and finding solutions which could result in issuance of an unmodified report by you. So basically what happens is the ethical and the professional issues raised. You would say that the auditor might consider that we might actually go ahead with the resignation as an auditor, because apparently we are being threatened, we are being intimidated, we are being told that we have to modify, and we are being told that the things. So apparently the integrity is in doubt. So before it's too late, the auditor should consider withdrawing from this specific audit. Anyways, so this is actually question number 4. Now let's move on to question number 5, which is then again a question pertaining to the part A is pertaining to the ethical and the professional matters, and part B is actually about implications in the audit report. So how about if you could just go through question number 5 in a quick. Okay, let's move forward and let's just discuss this question number 5. It says you are an audit manager working for Reven & Co., a firm of chartered certified accountants. Now you specialize in the audit of companies in the IT sector. Issues have arisen in relation to 2 different clients which require your attention. Now what do we need to do in relation to the information provided for Gul company? Comment on ethical and professional matters in relation to recruitment requests made by Gul company. Secondly, the implications the governance structure and the proposed listing may have on the audit process. Now see, Gul is a large private company which is currently owned by Brenner family, who own the majority of the company's share. Following the completion of the audit this year, finance director contacted you and told you the family is considering listing the company on the stock exchange. They would like to recruit one of your audit partners for a 6-month period to help prepare for the listing. The number one of them is ethically, a partner of an audit firm cannot be on the board of directors of a company. Now, if we actually deploy our company's partner for the engagement, which would require, which would actually result in the preparation of the documents for the listing of the company, this means there would be various ethical threats arising. Now, what are those ethical threats arising? Number one of them is advocacy threat. The second one of them is going to be the self-review threat. So there are going to be advocacy, there's going to be self-review. Now, there's going to be advocacy threat, there's going to be a self-review threat. Furthermore, it says that the board is concerned that necessary skills and personnel to support the listings are currently not present. They have also requested that your firm assist them in identifying and recruiting new members to the board. We could actually assist them in identifying new members to the board, but then there is a problem. Now, what is the problem? The biggest problem that would actually arise is that while recruitment, you play a management role. What is the management role? Which is to hire people, to fire people, to allocate the resources, etc. So you could assist them in identifying the people that could be the potential people for the recruitment, but you can't go for a final say that this XYZ person should be connected. So what you need to understand is you need to say that this is also an ethical issue. It says currently most of the executive director roles are performed by the family members, except for the directors of operation and human resource, who are both long-serving employees. Now, if the company is actually going for listing, then it would have to actually adopt the code of corporate governance, and the code of corporate governance would actually require non-executive directors to be there on the board. You can't actually have all the executive directors on the board, because that would result in the existing family or the existing board of directors to be operating without any supervision. So non-executive directors are needed. Furthermore, it says the board approves no audit committee. So if there is no audit committee, that means there's a serious deficiency in the code of corporate governance compliance, and there's only one non-executive director who works as an IT consultant. Now, having less number of non-executive directors is also an issue. Other than recruitment, Gul is not planning any changes in its governance structure prior to or subsequent to listing. Gul is a financial year end of 31st March, and the audit planning is scheduled to take place in January 2017. Now, the ethical and the professional matter in relation to the recruitment request, we have talked about it. This would result in self-review, self-interest, advocacy. These are the various threats that would arise if the partner goes on board. And secondly, for the governance structure, there are not sufficient NEDs. At the same time, you don't have the proper audit committee. At the same time, the number of non-executive directors need to improve. So these are the various things that actually need to happen. Next part. It says, in respect of each of the matters described above, discuss the implications for the auditor's report and recommend any further actions necessary. So if you talk about it, in this case, it says audit of Crow, a designer and manufacturer of mobile information technologies. for year ended so and so is nearly complete. An auditor's report is to be signed immediately. The following outstanding matters still require your consideration. The draft profit before tax and total assets for the year are so and so. So if I say profit before tax, it has gone down significantly. Approximately it's a 45 million decline on 111 million, gives rise to around approximately 37-38% decline. And the assets have also gone down significantly. Crow is not a listed company. It says during the year $7 million, $7 million has to be compared with the PBT, and this would give rise to material relating to new military research project were recorded in SOFP. The audit team was given brief summaries of the cost incurred, but when asked for further corroborating evidence, management stated that they had signed a confidentiality agreement with the military and were unable to provide further evidence. The only additional information provided was that they anticipated the project to last for 3 years and that may lead to a highly lucrative contract. Now, for each of the matters that is described above, discuss the implications for the auditor report and recommend any further action necessary. So obviously, if we see this 7 million is a material expense, and at the same time, second thing, what is actually going to happen is that the management is not willing to support them. Why? Because they're not sharing anything with them on the basis of confidentiality agreement with the military. But everything is not confidential. I mean, there is definitely confidential piece of information, but everything can't be confidential. There could actually be some piece of information which is not highly confidential and can be shared easily. So the important point is that you need to understand one thing, that it just can't be the case that everything becomes a confidential aspect and that it can't be shared. No, it can't be like this. So you would actually discuss with management, request them that they could share the information which is not critical, but so that we could have a more idea about what expenditure has been made and what research and development expenditure is there. So we could have a better idea, because if they don't show, then it becomes impossible. We are unable to gather sufficient and appropriate audit evidence. So there would be a problem. Maybe very difficult, because military would even get offended when they come to know that who is actually, I mean, if they come to know that people know that who is actually doing work on their behalf, the military would get offended generally. So the next thing is the fire. During the year, a major catastrophe took place when a fire caused significant damage to the operation of the company, leading to production ceasing for several months. While operations have resumed, repairs are ongoing and anticipated that full production will not resume for at least another 6 months. Audit procedure revealed the matter that has been fully and satisfactorily reflected and disclosed in financial and does not pose a significant risk to the going concern status of Crow Company. One thing is the profits have gone down, and but it is expected to stay idle for the next 6 months also. The cash position is not shown, otherwise we would have had a better idea. And what it says is that major catastrophe took place when fire caused significant damage to operations of company, leading to production ceasing for several months. While operations have resumed, repairs and ongoing, anticipated that full production will not resume for at least another 6 months. Now, audit procedure revealed that matter has been fully and satisfactorily reflected and disclosed in the financials, and that it does not pose a significant risk in the going concern status of the company. So if I summarize, so what is going to happen is that we are going to discuss the implications of the audit report. Is that in case number 1, it's a material item, so we could go ahead and we could say that the management needs to provide us the evidence, otherwise it would be inability to obtain sufficient and appropriate evidence, and we might go for qualification. The second, for the fire, it may result in the company's going concern to be affected. The reason behind that is that the operations of the company may cease. They've already been ceased, they may cease, and we might end up losing the market position. So there are several problems. So what should happen is that we could actually discuss the various going concern effects that we have discussed earlier, which is the material uncertainty to going concern. So like if there is no disclosure, then you can give adverse. If there is a disclosure but inadequate disclosure, you might give a qualified opinion. And if there is, in case, a proper disclosure about the material uncertainty to going concern, then the audit report would contain a section of the material uncertainty to going concern. So I hope this actually clarifies whatever that is being asked by the examiner in this question. Anyone has any questions? Osama will share that on the WhatsApp group. And you can follow me over the Facebook also. Will update that on the Facebook also, the list of the important questions. Abrar, can somebody please share the WhatsApp group link here? There's this WhatsApp link, Abrar, you can follow and you can join on your own. Okay guys, now the question mark is that how should we attempt the paper and how should we prepare? So I think one thing which is very important is that you should not go for the selective study. A lot of students go for a selective study. So you should not go for selective study. That's rule number one. The rule number two is that all of the recent articles should be gone through. You should go through the recent articles, which is like around last 4 or 5 articles that have been published. The rule number 3 is that practice, specifically for the last 6 attempts. So that's rule number 3. If you do it this way, and fourth is when you actually plan out the answer, when you write down the answer, you just try to compare your answer with the marking scheme of the examiner and you will get a better idea. So because you see what happens is we generally when we attempt the question, we don't write. Even we don't even write the answer plan also. I am not saying that you write down the whole answer. I'm just saying you even don't write down the answer plan also. So you should write down the answer plan so that you could be in a better position to write a complete and comprehensive answer. Because the more you plan, the better it is going to be. Okay, anyone else has any other question? Sania, you could discuss, but no. Generally, you should focus on the audit risk. Khwaja Bilal, what I would actually suggest is that you use the revision kit. Use examiner answer as a guide only And what you could do is that you could use the marking scheme to compare that if you are thinking correctly. Smita, yes, you could apply. Azim, you could search generally Luqman Rafiq over Facebook and you'll find it. Okay, thanks a lot everybody. Thank you for your time. Thank you for attending this session. I hope that this session is actually Abhi Ogan, which question are you talking about? Taj Mohammed, last minute advice is to relax. Abhi Ogan, the temporary assignment is okay, but once it goes for the temporary assignment, then what happens is if the financials are being reviewed by the audit firm, so it becomes a problematic situation. It's a complete self-review threat. I think 6 attempts. Yeah, if it's temporary, but then again the self-review threat would also arise. Junaid Bajwa, firm can provide multiple services, but for the listed companies, which is the public interest entity, you are not allowed to actually perform this services, a lot of services, which have an effect on the finances. Okay. So thank you very much. It was good to have you people over the last 5-6 days. Let's hope for the best. Sania, no, I mean, why do you need to discuss the business risk in the audit risk scenario? Okay, Word file would be shared to you. It would be sent over on the email. Anyways, thank you.